Hi, everyone. This is Ben Webster. Welcome to the second episode of the Scaling Alpha podcast. Today, I'm joined by Christopher Reichelt. Am I pronouncing that correctly?
Reichelt.
Reichelt. I apologize.
No worries.
Founder and managing partner of Reichelt Capital. It's a technology-focused investment firm that he co-founded in 2016 with a fellow Air Force pilot, applying his first principles thinking and deep domain research to identify transformational public technology companies in aerospace, energy, and biotech. Christopher flew C-130Js. Is that the correct airplane that you flew in the Air Force?
Yeah, that's correct. Yeah.
Yeah. He holds a degree in astronautical engineering from the Air Force Academy and a graduate degree in financial economics from Johns Hopkins. Christopher, over to you. Could you take us through your background and how you got to where you are today? And also, do you prefer Chris or Christopher?
Yeah, I go by Chris. So,
All right. All right. There you go, Chris. So again, tell us a little bit about your background and how you got to where you are today.
Yeah. Well, first, thanks for having me, Ben. It's a pleasure to talk with you today.
Thank you.
Yeah. So I have a unique career arc. I would say I started off as a kid, always being interested in how things worked, and took all sorts of things apart, played with Legos, that kind of thing. I actually helped my dad build an airplane when I was
Oh, wow.
13 years old or so, and I actually soloed an airplane before I got my driver's license. So flying and like aerospace, I was always super interested in space and astronomy as a kid.
Yeah. Yep.
So I knew from an early age I wanted to do something aeronautical, astronautical. And in high school, actually, I remember seeing the Ansari X Prize, the Starship One.
Nice.
Virgin Galactic actually, won the competition with Starship One, and that really lit the fire in me to be, I want to be an astronaut. So like with the interest in aviation and space, I was like, I'm all in. I got to go Air Force. I want to become an astronaut. So I, went to the Air Force Academy. Like you said, I studied astronautical engineering. Got picked up for pilot training. Yeah, went through lots of Air Force flight schools and ended up tracking to the C-130J, which is the four fans of freedom, the workhorse of the Air Force, if you will. It's,
Yep.
Yeah, it's one of the, in my opinion, the best aircraft. We do the most diverse mission sets. I've got ultimately progressed all the way up to instructor pilot and flew the machine all around the world, doing all sorts of crazy missions with four of my best teammates. So that really got my appetite whet for aerospace, for what a small dedicated team of consummate professionals can actually accomplish. And yeah, that's how I started. Turns out I tried to do the astronaut thing, wasn't in my deck of cards for a multitude of reasons. I actually got selected for a program called Defense Ventures, which allowed me to basically take a bit of a sabbatical from the Air Force and go work with a cybersecurity startup to try to teach commercial industry, DoD needs and language, and also take back to the Air Force some learnings and efficiency and kind of the startup mentality, how we can innovate and adapt and overcome faster in competitive, the competitive environment of the world today.
That's amazing. That's amazing. One side note, I was actually on the phone earlier today to sign my son up for flight training. He's
Oh,
15.
really?
I mentioned I had a
Outstanding.
15-year-old son, and
Outstanding.
he will also probably get his pilot license before he gets his driver's license. So,
It's Yeah, that's great. It really is such an empowering thing for a young person, and it boosts your confidence. It really teaches you that like you can do what you set your mind to, and there's nothing quite like flying either. It's just very fun and inspiring. So that congratulations to him. That's really cool.
yeah, and it's really cool that you did it as well so young, and it seems like that was a huge kind of foundational and formational input into who you are today, and how you look at the world, right? And you mentioned when discussing your background about how flying in those missions, which is a whole nother conversation. In a lot of ways, I'd love to go there, but
I got a lot of war stories, but
yeah, but really kind of focused you on what a small team of dedicated professionals can do and what they could accomplish, and that obviously can connect you to what you're doing today. But
100%.
take that aside, what caused you to go from the Air Force and move into investments specifically? What's the connection there?
Yeah, great question. So, um, you know, in college, I had a friend recommend me a book from Robert Kiyosaki, Rich Dad Poor Dad, and
I've read it. Yep.
yeah, and that really, my family was middle, middle America. We didn't really have a whole lot of money, but we weren't poor or anything. But investments, talk about money was never a thing growing up. So when I read that book, I was like, oh, wow, okay, so this is how folks really acquire wealth in America today, and that cracked the door to like learning about investments, learning about companies, and how innovative technologies are actually brought into existence in corporate America. So that led me down a path of just being inquisitive, and I started playing with my own money in the stock market and just sticking with it. I mean, one of the things that kind of I would say my early childhood instilled in me is perseverance. Like getting your pilot's license is not a like weekend thing. You have to work
Yep.
at it and study and fail, and then learn from your instructor what you've messed up.
Yep.
So it's quite the undertaking and the path, but ultimately persistence pays off. And that kind of thinking led me down the path of managing my own money. And
Yep.
actually, funny enough, on a deployment in Afghanistan, my soon-to-be co-founder approached me and was like, "Hey, so rumor is you're like doing pretty good managing your own money. A few of us have been talking and want you to manage our money too." And
Interesting.
I was like, "Okay, well, I have no idea how to do that.
Yep.
I'm pretty sure I can't just take your money." So
Yeah. You got to get licenses.
right. Long story short, that led me down the path of, okay, what does that actually entail? How does one go about doing that? What are the things that I don't even know that I need to go learn about, and licensing and company formation, all this kind of stuff. So that ultimately resulted in a few years later in the formation of Reichelt Capital. I would say all of that was built on a foundation of, as I kind of alluded to, always being interested in technology and curious how companies actually build out and manifest technologies in the world today, as well as what really shapes society and the world at large, and where all of this is going. I mean, something as simple as like the internet. Like I remember when I was in middle school, like the internet was just a new kind of thing, and in the span of 10, 15 years, it became absolutely ubiquitous and essential to every business on Earth. That kind of like world-changing technology that changed from like a very niche use case to prevalent in everyday life really interests me. And there's so many domains that that kind of trend kind of manifests itself in.
That's amazing. And we're in the middle of another one right now.
Exactly.
We're probably actually in this weird time where, and we'll get into AI a little bit more in the podcast, where I feel AI is an inflection point, which is going to cause world-changing, like internet-like changing technologies on many fronts. So it's
100%.
a good, interesting, very interesting time to be alive. I would like to take a quick side turn and just tell me about Reichelt Capital. What is your kind of investment strategy? Give us the overview so the market understands what your strategy is and what makes it different, because I think that'll help us inform some of the other questions that we want to discuss in the podcast.
Yeah, absolutely. So, I mean, in a nutshell, Reichelt Capital is a hedge fund where we look for world-changing technologies, and
Got it.
Our domains of expertise are in aerospace, space, energy, biotech, and and then the kind of tangential technologies around those. I would say that we'll probably get into this in more detail, but one of the things that I realized very early on, and it became even more prevalent. I actually did a stint as a financial advisor at a traditional RIA. Traditional money managers do not have a hard science background. They don't understand what it actually takes to manufacture. They don't understand what it actually takes for systems level engineering. And having a deep understanding of that, having been an operator on complex machinery.
Yep.
Having a hard, astronautical engineering background. I actually for my capstone, I built from the ground up a rocket that did Mach 7. So like really
Wow.
having a hands-on experience of what it actually takes to full life cycle bring a technology into existence gives someone a big edge, especially when it comes to public markets where number one, most people are looking at like what's the earnings next quarter. No
Exactly.
technology worth anything comes out in a quarter. Like
Yep.
overnight
Exactly.
successes are 10 years in the making.
Yep.
So number two, the financial games that we play are fundamentally different than the days of Benjamin Graham. And that's not to disparage any value investing. In fact, one of my first big investing book I ever read was The Intelligent Investor by Benjamin Graham. And
That's what that was my first one as well.
yep,
So we have
I
that in
became
common.
a devout Warren Buffett disciple, if you will. But the environment we play in today is markedly different than what it was, even 20 years ago, and will almost certainly be unrecognizable in 20 years' time. So things like basing all your financial models off of discounted cash flow, using the Sharpe ratio as your performance metric, all these kind of like naturally ingrained things that are taught in finance classes and hell, even graduate economics programs, you really have to look at the underlying assumptions and from a first principles kind of standpoint, ask yourself, do these still apply? Where are the gaps in the reasoning that go into these kind of metrics to use for modeling?
Hmm.
That's a long-winded way to say capital turns those on its head.
Well, it seems like one of your main edges, right? I'm not to say it's your only edge, is I would assume would be able to deep dive into the technologies of your focus, right?
Correct. Yeah.
And to understand the potential future value creation, as well as if how those technologies and the services and products based on those technologies are positioned against other offerings that may be out there, right? So tell me a little bit more about how your background in engineering, your background and your co-founder's background in aviation, how that directly applies to this core edge of yours.
Yeah, great questions. I would say, unlike most financial analysts or firms out there, we don't start generally by looking at company 10Ks or reading reading the latest Wall Street Journal article. We start from reading science research papers,
Interesting.
which most people can't even read, let alone finance. And it's not complicated, but if you can speak some basic mathematics, I mean the nature operates in calculus, so you
Yep.
need to be able to like understand calculus, being able to understand the scientific method at a fundamental level. That immediately gives you a big leg up on understanding what breakthroughs are meaningful. Whether this is a benchtop prototype that really will suffer from mass production and scalability issues, or whether or not there actually is a fundamental breakthrough in the technology. And I would say that kind of lends itself to the what I like to call meat space, so physical reality kind of products. But that exactly applies to informational edges as well. So I mean, like
Yep.
there is a more economics papers than you could possibly ever hope to read. And another thing I would add too is that most people don't actually spend the time to like browse through what is actually shaping the world today. So like Reichelt Capital, predominantly goes from a big picture to small picture framework. So like I alluded to, one of the first things we do is we're reading scientific journals, staying on top of new research papers, and looking at how those potentially shape the world, what specific impacts they have on subsectors. And then we go into the kind of financial aspect of things. So what companies are actually doing meaningful work in those domains? What
Yep.
economic moats do they actually have?
Yep.
Then having, I would say my graduate, like you said, my graduate degrees in economics, financial economics, that really has given us the ability to digest all of the traditional value investing type pieces of data out there. So all of your fundamental 10Ks and earnings reports and looking at all the, all the various financial ratios to understand, okay, is there actual good structure in this company? Are they appropriately using capital?
Mm-hmm.
I'm a huge, and this is well outside finance as well, but humans operate on incentives. So,
Yeah, they do.
so stupid, simple example, but how's the management incentivized?
Yeah,
Are there
exactly. Very important.
right, exactly. Like you would think this would be obvious, but I've had I don't know how many conversations with traditional money managers, and that's like something they're not even really like they don't even really value or put much weight into. And it's like,
Mm-hmm.
well, no. You're like, I mean, how's their compensation package? Is it in their own company stock? Are they buying their own company stock?
Yeah, yeah. There's some basics, but yeah, I mean you've hit the nail on the head about you just take ignore finance completely. If you want to understand how the world works, and it's extremely complex, and I'm saying that I'm not saying it'll make you right in how you look at everything, but if you just track everything back to the incentives, right,
Yep,
it explains a lot. And
absolutely.
that's definitely true in investing, especially if you are trying to. I would say it's even more important when your investment thesis is based on technologies that may take years to play out, right? When you're
100%.
looking at
Yeah,
long-term horizons at world-changing technologies, right?
yeah,
And
yeah.
and so looking at that in mind, right? Right now we have a lot of world-changing technologies, AI among them, but also is just kind of this revitalization of the aerospace and defense technology companies, which I think in a lot of ways was started by Elon with SpaceX, but there was others trying to do it at the same time as well. For that kind of industry, right? Those industries, right? How does your thesis on those industries and how you approach those industries different from kind of what your everyday average kind of institutional investment firm may employ?
Yeah, good question. So putting on my military hat, first and foremost, space is the ultimate high ground, and you always want the high ground. So
Yep.
what that means for non-military perspective is every industry, every technology ultimately has a application or use case in space. I mean, take information technology, the internet.
Yep.
Like if we can bring the internet to every human being on Earth, what does that accomplish? Well, I mean, like the first order things that it can accomplish is spreading knowledge and education. Like that's there's so many people around the world that don't have access to high quality education. What else
Yep.
does that accomplish on a second order? I mean, it potentially changing the governance structures of countries. If governments can no longer control what information flows to their populace, what are the
Hmm.
consequences that have?
Yep.
The things that we're starting to do are actual manufacturing in space. There's a commonly known fiber optic material called Z-band
Hmm.
is best produced in microgravity of space, the
Interesting. I
highest
haven't heard
highest
of that.
level. Have you heard of
And
that?
what's what? Yeah, I haven't heard of that technology. Tell me a little bit about it.
So in fiber optics, the latency and basically noise ratios you get in transmission are directly a function of the crystal structure of your fiber cable. And
Yep. Okay. Makes
because
sense.
you don't have buoyancy issues in space when a crystal is forming, you get much higher quality crystals when you manufacture these things in space than you do
Oh,
on
interesting.
Earth. Related to that is everything to do with chemistry. So drugs, pharmacology, material science. There's all these domains that we are only beginning to scratch the surface on of what can actually be accomplished by moving. Not really changing processing or
Hmm.
material fabrication technologies too much, but just moving where you're doing it.
Yep.
And all these things are unlocked in space. So I would say having the recognition that space conveys a whole cornucopia of possibilities that we're just beginning to scratch the surface of really is a
Especially
big unlock.
especially with AI and robotics, the ability
Absolutely.
to
Yeah.
mass produce in space without as the limitations that a human body has to go through to actually make that possible. It's a fascinating time to be alive, and just on the outside looking in, you know, your ability to assess these technologies well really puts you in a position to essentially capitalize assuming you make the right decisions, which you can never promise that you can do those,
No.
to capitalize on truly transformational technologies that are going to change the world so that in 20 years it's going to be a very different one than we live today. And if you can participate in that, and that is a definitely interesting strategy.
Yeah,
You
yeah.
know?
I would add. One of the core tenets of what we invest in is really well captured, I think, by what one of the things Elon Musk said, which is success is now in the possibility of outcomes. So we predominantly look for technologies where the legacy paradigm is completely obfuscated, because that is where you're increasing your probability of a hunter bagger.
Yep.
We're not looking for incremental improvements. We're not looking for another 15% market return. We're looking for
Yep.
companies that can completely change how the game is played, be it in
Yep.
aerospace, be it in money, be it in energy, what have you, whatever the domain is. If the company doesn't have the possibility of completely upending the paradigm, then we're not really interested.
There's obviously SpaceX went public on Friday, and it's presented an interesting conundrum to politicians, to a whole swath of the financial industry in regards to how they look at investing in companies. So what I mean by that is the valuation is extremely significant. I'm a person who will almost always bet on Elon Musk's abilities to succeed on a company's building. But take that aside, Elon aside, there's probably a ton of companies that are building world-changing technologies and companies based upon those technologies. And I think we see the financial markets now, especially the private markets, but it's also going to transition as these companies go public in astronomical valuations, where in a traditional way of investing, investors go, this is way overpriced, right? How do you separate the wheat from the chaff? Because there's going to be a number of companies that come to market that are just going to be riding that trend, but aren't going to be the winners. How do you find the winners?
Yeah, good question. So I guess first, two things can be true simultaneously. One, a company can be overvalued, and it can also have good fundamentals.
Yep.
Any combination of those two characteristics can also be true. So like you could have terrible fundamentals and be overvalued, or it can have terrible fundamentals and be undervalued. So like an investor, especially for the long term, really has to deeply and confidently understand where on that quadrant company XYZ falls. Two, especially for the non-BlackRocks of the world where capital is limited, choosing to invest in something is also choosing to not invest in something else. So you have to not only have high conviction in what you're doing, but know how that fits into your overall portfolio and timeline of future events, what you're planning on doing in 12, 24, 36 months time. So those play, especially into a portfolio manager like myself, that plays into decision-making framework. Yeah, and three, I would say, this is probably self-explanatory as well, but invest where you have alpha, where you know the ins and outs, where you not only have a technical expertise and have done due diligence on the company itself, but can confidently say the market is mispricing it.
Yep.
Because your buy price is typically where you make the most money.
Yeah, it's very true.
Even if fantastic company and they're going to change the world, if you don't get a good price for it, if you want to sell it later on, you're not going to make what you could.
Yeah, and it's all about what you think the future value is going to be, obviously, right?
Very true.
There's also the idea that, an example, my brother made his initial wealth flipping homes, and it just kept on going up and up, and I would be like, Ben, you should do it as well. And I never did it. And the reason why I didn't do it is I always thought it was inflated, right? But what was wrong, prices were inflated. What I got wrong was, where were the prices going? It may have gone up a lot and the market was perceiving it as too high, but at the time. But in reality, if you look at the the data and where he was doing it and the overall trends of where people wanted to live, it was way underpriced for price. So again, it's kind of like from the Tesla thing. I think a lot of people want to stay away, not Tesla, excuse me, SpaceX want to stay away from it, but it maybe seem overpriced by standard ways of analyzing companies and stocks, but future expectation, it may be underpriced, right? And I guess specifically this relates to, right, the most of the investment industry is bogged down by outdated frameworks, which you kind of you were kind of mentioning earlier in the call. Well, tell me specifically, what are those outdated frameworks, and how does that change how you're looking to invest outside of your technology thesis?
Yeah. Okay. So I guess the first thing that comes to mind as you were talking there was there's something I think a lot of money managers specifically miss, which is, I believe it was actually characterized by Annie Duke, I think a famous poker player. But at any rate, it's called resulting, which is essentially the framework of understanding where you can have a decision-making framework that results in an outcome, and the outcome can be positive. That does not mean your decision-making framework was correct. You can also have a decision-making framework where you go through it and your result, the final result, is negative, i.e. the price isn't where you thought it was going to be. That too does not necessitate your decision-making framework being incorrect. So you need to be able to distinguish between, like, was your thinking process fundamentally based on true axioms?
Yep.
And then the outcome, how did that was that in your favor or not? And then try to suss out why. And then the converse of those two as well. So that really helps shape and improve over time your thinking about investing.
Okay.
So the outdated frameworks that kind of led me to start Reichelt Capital to begin with, I think I alluded to the first one, which is the discounted cash flow. Especially being a student of Warren Buffett, once I really dove into, like, okay, how do we actually calculate discounted cash flow? What are the assumptions baked into that? What is the risk-free rate? Like, is that still true? Those kind of things, like, wait a minute, there's a lot of, like, gaping holes in this. And yet, that is the bedrock framework for, a ton of financial modeling. The other one we kind of already talked about as well, which was, technical domain expertise. Like, I really don't think you're going to be able to truly understand where a technology can go and not sell it early or try to trade it if you don't have a fundamental, hard science-based understanding of what is required to bring it to fruition and ultimately what could be the impact on the world as a result.
You're showing your Warren Buffett disciplehood here. Like, that's, for example, Warren Buffett not investing in technology because he didn't understand it, right?
Yeah.
That's why he stayed away for years and years and years, right?
Yep. Yeah. I mean, there's, regardless of, your people's current views, he's the GOAT for a reason. Like, his thinking was, predicated on really sound reasoning. So I think that there's timeless lessons to be learned there.
Yeah, and there's obviously valid strategies for people who don't understand those technology and that they can make money investing in those technologies. But that's the beauty of investing. There is a lot of different and valid ways to make money.
Exactly.
But if you're looking at the long-term horizon, right, and taking concentrated bets in transformational technologies that are going to replace outdated ones, right? It's going to be very hard to be an elite investor there unless you can really, either you yourself or people that are advising you and are hand in hand with you in researching those firms, having a good deep technical knowledge of why those companies and the technologies that they are using are transformational, right?
Yeah, absolutely. You hit the nail on the head. There's a million different ways to make money in the market, and there's no right way. So you have to figure out what works for you and your team, and then lean into it.
And what your edge is, and clearly,
exactly. Most importantly, what your edge is.
And lean into that. Well, we've talked about a lot of these transformational technologies. Hey, AI, right, is changing the world in so many ways. How is it changing not necessarily what you invest in? How is it changing how you actually conduct investment research?
Yeah, so I would say in the past, I'll back up. So I've been interested in machine learning for well over a decade, and actually back in 2015, I think it was, started building my own neural nets to try to do some of what is, click of a button today.
Yep.
So I've kind of seen that this was going to be important. And I don't know who said it, but I think it's very salient, which is, if we actually achieve general artificial intelligence, it's the last invention humanity will ever make.
Yep.
So we have, the history of human civilization is inventing new technologies to, by and large, augment our physical capability. And we're on the precipice of augmenting our intellectual capability. And I don't think again, two things can be true. I don't think it can be understated, and I also don't think it's going to change everything overnight either. So for us, in the past 18 months, we've used AI to build more tools and more efficient workflows than we have in the past 112 months.
Yeah.
So the rate of change and improvement is just going vertical. And this is another really important point too, which is humans suck at exponential thinking. We did not evolve to see the cheetah over there and then move a foot and then move 10 feet and then move 100 feet. No, the cheetah runs 1 foot per minute or 1 foot per second. The quintessential example is like if a pond is covered in lily pads on day 50 and the lily pads double every day, on what day is the pond half full? And intuitively people are like, day 25? Like, no, it's day 49. It's day 49 because they double every day. Like our brains are not natively wired to think in exponentials. And yet the confluence of information technologies, of having higher fidelity resolution on being able to manipulate physical substrate in terms of 3D printing, lithography, computation is actually a big one as well. So all these confluence of technologies coupled with AI now to be able to rapidly iterate and work through the entire probability space of what is likely to produce fruitful outcomes. We're not really wired for it, and anybody that says they know where it's going is BSing. They don't.
I know. Even the smartest people in the world get it wrong all the time, right? Yeah. So let's relate AI to your researching of technology, right? So again, your edge is to try to understand. Your edge is having a good, strong science background, right? And such a lot of physical science background as well. But you can't know everything, right? And the world's constantly changing. New stuff is coming out all the time. How do you use AI to research the technologies and the science behind companies that are companies that you are evaluating to include in your portfolio? How has it changed how you go about doing that?
Yeah, great question. 100 different ways. I would say the top level is, I can read 1 to 2 new research papers a day and really kind of grok them. One of my AI employees reads about 100 a day.
Yep.
And synthesizes hey, I think this is, actionable. Hey, this is still pretty, research grade. Hey, this is something to watch over the next, 18 months. So that's first.
So you let's say you say one of your AI research aides, right? I may have got your words wrong.
Employees,
but your employees, right? In order for it to do it well, right? You probably, correct me if I'm wrong, had to build some sort of custom workflow. Like these are the steps you take to do this well. Tell me a little bit about that.
Yeah. So I mean, that's a great point, and I think people often, especially if you're not staying on top of stuff on a daily basis, think the latest AI is ChatGPT, and I ask a question and it's a better Google. That is not the power use case of some of these technologies today. The future is going to be agentic workflows where they are loops within loops, and importantly, especially from a research analyst hat, they're only as good as your thinking. So it is an augmenting tool to how you think. It can 10x it, but garbage in, garbage out. If you type to your chatbot I don't know, whatever, Meta's the best investment possible, give me 10 reasons why, it's going to give you 10 reasons why.
Yep.
Instead, if you approach it from a good analyst type framework of, hey, I'm seeing these broader trends. I think these handful of companies are good in that domain. Give me the pros and cons for each one, and then let the human and the team and then a collaborative process of iteration back and forth suss out where your gaps in thinking were to ultimately arrive at a better conclusion. It's not to supplant your thinking and spoon feed you an answer.
Well, and I think that's the problem. I think the vast majority of the market thinks that that's what AI was built to do. But even if it could give you the right answer every time, we in the investment industry know then that the alpha is going to be disappearing on that pretty damn quick. And so first of all, we're very far from that happening where it's going to be able to give you the answer to anything you want to know about any given company, right? We have this philosophy. We've actually done some research on this, that somewhere between 55 to 60% of analysts, investment analysts, bottom-up investment analysts. Sorry, I apologize. And the average bottoms-up investment analyst, I'm not talking about newbies, but ones who have been doing it for multiple years and have built a track record where, hey, they can really stick in this industry. About 55 to 60% of the time, they choose the right companies. Now, obviously, there's holding periods, there's portfolio management, weighting, there's a whole bunch of other things that influence investment outcomes. But they actually have had a good investment thesis, or potentially a good investment thesis, right? That generates 55 to 60% wins. You go to Vegas all day long with those odds. The question is why do they produce more wins than losses? The reason why is they spend a long time honing a very specific investment process, a very specific approach. And there's no guarantee that an AI will follow that approach unless someone like yourself, who is got technical expertise, knows how to work with the AI to ensure that it follows a very strict analytical process that you feel is tried and true, tested by time to actually more often produce positive results than negative results. That's how we look at it. I don't know. Comment on that. What are your thoughts?
I would agree with you. I would wholeheartedly agree with that. The one addition I would add is you can use some of the current AI capabilities to elucidate possibilities that you do not have in your framework. So, a common technique that I use is reverse prompting. So like asking your AI teammate, like, hey, what information would you want to see from me, or what questions would you ask me to further hone this thesis, or what other pieces of information would you want to know to put a confidence bound of 90% plus or minus 5 on that. So again, not like really treating it as a very smart graduate level employee, but not also giving them full keys to your Ferrari to go 200 miles an hour down the Autobahn.
Yep. Yeah, I always feel like you're like using it to in a way as a real, and almost it's a virtual, but it as actually a true colleague where you're exchanging ideas to hone to make each other better, right?
Absolutely. That's the way we use them. And like I said, we have 3 full-time AI employees that each do different subdomain roles in the company.
Interesting. Are they each focused on different parts of the market, like biotech versus, or is it different portions of the research process?
Yeah, so I'll just straight up tell you, we have one that is a full-time analyst that helps augment myself and my co-founders' research process, and we do our workflow with that bot. We have one that augments our compliance officer full-time, staying on top of all of our regulatory requirements. And we have one that's a full-time programmer to augment some of the tools that I've built out.
That's absolutely fantastic. That's interesting. I hadn't even thought about from the perspective of what you're doing, right? There's a whole, we should almost could have a follow-up episode about this, but
I could talk about this all day. There's so many interesting areas to dive into.
Yeah. The idea of I get the compliance. That's awesome. The more you can lower your burden and still do that well. No one likes the compliance, but you got to do it, and you got to do it well. And it takes away from your time to actually do what you love. Learn how to find good companies to invest in. But the programming, right? Give me an example of a tool that programming AI agent has built for you that you feel you want to talk about to the world?
Oh goodness. Okay. Well, the so we're a small company,
Hmm.
and previously we were using our back office software, which we'll say tens of thousands of dollars a year for an okay system, and didn't have the statistical reporting that I ultimately was looking for. Being
Hmm.
again someone who's technically minded in the finance space, I like numbers. I wanted very fine pointed statistics on all of the different characteristics of our portfolio, companies, performance, all that. And
Nice.
ultimately, the thing we had wasn't cutting mustard there. So
Yep.
in the span of about 3 weeks, we were able to internally develop a system that far superior than commercial product, and yeah, that's what we use now.
And being familiar with the hedge fund world, this could potentially benefit you in a number of ways. It really just depends on how you charge fees to the fund, right? Charge your costs to the fund. Some hedge funds, trading technologies, portfolio management, reporting technologies is a cost that the fund bears. I don't know how it is with you, but let's say it was, right? You've just saved your client's money.
Yeah.
Reduced the costs of
Yep.
the firm by building it yourself. And
Yeah,
and
100%.
these.
So you're right. Some of our fees are chargeable to the fund. Another point that we didn't really get into, but I think is
Yep.
very important for Reichelt Capital, and I think important for the industry at large,
Mm-hmm.
which is like questioning why things are done the way they are.
Yes.
Asking better questions will result in better outcomes. So, like,
Yep.
is there a better way we could be doing this? Are there
Mm-hmm.
technologies like AI that could
Mm-hmm.
10x our efficiency, not require we have a 10-person back office shop? So, yeah, that kind of thinking I think is it's baked into Reichelt Capital. Now, I will say because of the strategy we employ, there's two key principles that are also fundamental. Number one is trust, and I think
Mm-hmm.
this was really honed and beat into me with being a military aviator. Is if
Mm-hmm.
you don't have trust with your maintenance crew, that they attached your engine correctly, you're dead. If you don't have
Yep.
trust that your intel guy
Mm-hmm.
gave you the best intel that we have, you're dead. If you don't have
Yep.
trust that your co-pilot's doing what they need to be doing when you're talking on the radios, like again, not good outcomes. So having trust, that level of trust in most companies doesn't exist. It's purely transactional. Again,
Yep.
where do the incentives lie?
Yep.
And building a company from the ground up that has that level of trust between the managers, between the employees, between the LPs, really allows you to think differently and do things differently.
Yep.
First and foremost, a long-term time horizon.
Yep.
Most LPs, if you have like a 25% down quarter, like okay, I want all my money back. And important actually, our one of the important notes in our investor letter 2 years ago was if you look at like every company, every S&P 500 company that you're familiar with today, like say
Mm-hmm.
Netflix, Amazon, Tesla, any of them, almost to a T, they've had like 80% down draws.
Yeah.
And so, another key principle is price volatility is not risk.
Yep.
Risk is risk.
Yes.
What is actually going to upend the company and make them obsolete? That is risk.
Exactly. Yep. Exactly.
Yeah, so that's another key point. But again, that is only functionally workable if you've got these other things in place.
True. And you have to and you kind of hit on something that's really important as far as looking at drawdowns. You never get calls when you're doing well. You always get calls when you're doing bad. And so a part of you building Reichelt Capital is you being able to work with investors that are a good fit for you, right? And you're
100%.
a good fit for them.
We are looking at companies that are going to change the world, and
Yeah.
that likely does not happen in 6 months. So you have to go into it with that mindset. Again, price volatility does not equal risk. All of going back to the fundamentals of things that are broken in legacy finance. The Sharpe ratio treats upside and downside volatility exactly the same. And to your point,
Exactly.
I've never gotten a call when a stock tripled over the span of a month. Like nobody's
Yep.
ever complained it's too volatile.
Yep. Exactly.
So someone who can understand that.
Yep.
The other thing too is especially hit home to me when I worked in as a traditional RIA is that humans are over-indexed on conservatism, and you need to, that is not to say you should not have a bucket of money that is conservative, but most people do not have wild success in their set of possible outcomes. And what I mean by that is you need to have a bucket of capital that has the possibility of 100x. If you don't even, if you don't even have that as a possibility because you're only doing index funds,
you're never going to achieve it.
You're only doing bonds, you're never going to accumulate that potential amount of wealth.
Yep.
And especially as the markets become more competitive, especially as indexing has become the name of the game, especially as our debt has continued to balloon. I mean, this blows people's minds too, but a third of all money in existence has come into existence since 2020. And we're seeing the follow-on ramifications of that as we speak today. Continually elevated home prices, continually increasing CPI. Another thing that and I'm a bit going off on my soapbox here, but this stuff really,
That's okay.
Really
this is what you're here for.
Me.
Yep.
Why is inflation targeted to be 2%? Because an Australian economist in 1980, when asked in an interview, what should Western economies strive for in inflation, he was like, about 2% seems right. And that has propagated, I kid you not, that has propagated through the Western world as now the de facto standard.
Yeah, interesting. I hadn't heard that before.
Yes. So when you scratch at a lot of these assumptions, like, hey, how should an individual investor have money allocated? Well, you should have a safe pot, you should have a medium pot, and you should have a risky pot. If you don't even have a risky pot, it doesn't have to be much, but you need to have that in your total portfolio to have the possible outcome be grand success. Why are we willing to accept a market average of 10 to 15% when, no joke, the CPI numbers, the definition of CPI has been changed 27 times since 1983. And if you actually look at what I would consider to be a good metric for CPI, which is keeping the definition the same and then looking at that basket across time,
exactly.
Actually looking at upwards of 7.5% inflation. So real market returns, you're looking at about 7%. So does that justify the market volatility that you're actually incurring? Individual investor in question, but I would posit in the vast majority of cases, probably not. You probably could be doing things better.
Exactly. Well, there's a whole bunch of, you can go into modern portfolio theory and all the different, the 60-40 model. And there's all these different ways that you can approach, how you individually as an investor wants to take or avoid risk. And I think everyone's learning that some of these old models are breaking. It just takes a long time for people to it's the CYA syndrome, right? A lot of people may want to break with these old models, but if they break from the old models and things go wrong, then they're putting their businesses at risk. Their livelihood as an investment advisor or a financial planner or whatever. But you're in the position as a hedge fund where you have a strategy, you have the ability to stick to it and potentially generate those multiples that you're looking to do.
We look for world-changing technologies that the market misprices fundamentally. We take a long-term time horizon, and we do deep research that is uncommon to the industry, and then take high conviction bets. The frameworks by which we do that are all predicated on first principles thinking. So we look at the underlying assumptions that go into the investments that we're looking at. We look at the underlying technologies. We look at the incentive structures that govern the company from the top down.
Yep.
And ultimately look for companies where world-changing success is in the possible set of outcomes. The volatility is price volatility is not equal to risk, and that is conflated by so many people. And by kind of recognizing these things, applying these things in a methodical fashion, and then having the intestinal fortitude to stick with it, very positive outcomes can occur.
And especially if you have clients who have the same long-term horizon that you're looking at, it could be a very good positive fit. Chris, it was a true pleasure speaking with you. your diverse background and accomplishments. Truly impressive. Thank you so much, and I'll continue to follow your journey and wish you all the best of luck.
Thank you so much, Ben. I appreciate it.
Thank you so much, Chris. Thank you.
Bye.